Hello, everybody, and welcome. My name is Bennett Tchaikovsky, known as the accounting professor here on YouTube, and this is a much awaited. Haven't done this one in a while, but we're going to have some fun with it. We're going to talk about financial statement analysis, and we're going to more specifically kind of give you a little bit of an introduction to it. So before we get there, my disclaimer and copyright notice. The information and opinions in this presentation are those of myself and not my employers or affiliated organizations, including but not limited to Irvine Valley College and the South Orange County Community College District. Presentation is for educational purposes only and does not constitute any legal or accounting advice whatsoever. This presentation is copyright 2008 to 2025 by Bennett Tchaikovsky, all rights reserved. Any distribution is strictly prohibited. So when we're looking at analysis, a lot of times we want to jump in and say, oh, like, let's start kind of going through and crunching numbers. And we'll absolutely be doing that. We're going to be doing some liquidity ratios, efficiency or activity ratios, profitability ratios, market value ratios, and then lastly, solvency and leverage ratios. But the one part of financial analysis is that you can't just look at numbers on their own. You also have to really kind of go beyond the numbers and kind of see, well, what is it about, what is it about this company? Is this a good company? And not good in the numerical sense, but are they the right company for me to be investing in or myself to kind of go through and to work for? And that's what I'm going to kind of open with over here. And so when we look at qualitative analysis, and this is really about an investor looking at a lot of non-numerical factors, and I'll go through a few of these here today. We're really going to be focusing on the broader business, which you really have to do to kind of go through and assess for like long-term value and performance. And financial statements do provide great information to us. However, qualitative factors such as the business environment, leadership, or its reputation can often determine whether or not a company can ultimately, in the long term, sustain their performance. And let's go ahead and take a look at some of these. So the first one being is management and leadership. And when you are investing in a company, you're oftentimes investing in the CEO. I can share with you that if you were looking at a not-for-profit entity, one of my former CEOs, John Ward, rest in peace, he gave me a very good piece of advice when I was looking to join some not-for-profits. He said, Bennett, it starts and ends with the executive director. And he is absolutely correct. If you have a good executive director that's running the board of directors, you're generally going to you'll be fine. And, it's really about, is management, are they strong? Is it strong management? Do they have the ability to really adapt, innovate, and grow? And really, it's also too, when you have a CEO, does it feel as though it's more of a rental CEO? A lot of times with chief financial officers, you'll see some people that will come in and they have their expertise of going through and taking their companies public. And a lot of times at that point in time, it's really about them kind of stepping back and bringing in more of an operational chief financial officer. The same thing can also be said as well as with chief executive officers. If you have a founder who's in the company, now all of us really probably could not imagine Tesla without Elon Musk. There's a debate as terms of whether or not he's the founder, but for all intents and purposes, we'll say he's the founder. I'll let you go through and look that up on your own on YouTube. But without Elon Musk, and in terms of how he's going through and challenging those who works at his organization, it's not going to be the same company. And so when you're investing in a company, you really have to look at the management of that company. The second one, there's going to be more than what I'm listing out here, but the business environment and who are the competitors? Is it a really intensive competitive industry? Are there a lot of regulations? It was interesting. One of the students, I was looking at their store visit from, I believe it was either Dollar Tree or Dollar General, And they indicated on their report, they said, well, I went here not too long ago and they were selling fresh produce and it doesn't look like they're doing that anymore. So that's something where it's a regulatory environment. Why do businesses not want to sell produce? It's because you more than likely have to comply with a bunch of additional regulations. And is the company in a growing or declining industry? If I'm opening up an apparel franchise, that might be extremely difficult to do, especially with something like Amazon. And is there a lot of competition? What are basically going through and what are the different advantages? Strategic position and operations. Basically, a lot of companies kind of go through and engage in different activities like planning, investing, and operations. By the way, I'm violating my own rule by reading these slides, but they're coming from my artificial intelligence app, so we'll give it a little bit of a shout out here. Does the company have a growth strategy, such as a patented technology or superior customer service? And what you really should realize is that when you are working within a financial organization and when you've been a CFO, there's parts of the job where you're kind of going through and saying, okay, I'm playing catch up, I'm playing my compliance role, which is just going to be kind of going through and crunching out the numbers on a daily basis. But then you also have things like, well, that's one part of the organization, but does that CFO have that ability to simultaneously be looking ahead and analyzing their current operations? So what is their operations? Where are they positioned within their industry? Are they a market leader? Are they a follower? Are they doing their own thing? Just again, different things to think about. But again, this is not a numerical, it could possibly be quantified with results, but this is really much more of a qualitative analysis. Now, brand and reputation. Okay, so this is something that is very, very important when it comes to all products. For example, I got these, and I'm not being paid for this promotion. I'm just showing you this right over here. So these are Echo Buds, okay? And I got these on some kind of a Prime Day for $14.99. And boy, oh boy, compared to for $15, it's a pretty amazing deal. And what I would kind of go through and tell you is, hold on, let's do this. Wow, Bennett, you're losing grip on your technology. This is not good. Okay, let's go back over here. I think this looks right. Perfect. We're back in the right place. Okay. So when you look at Amazon, right, or you look at, when I buy a computer, I'm generally going to buy an Apple. Why is that the case? Not that PCs are bad. I think Chromebooks have actually come a long way, but does something have a solid brand reputation? One of my students showed up late to class. And of course, why was she late to class? Well, she was driving a Range Rover. That gave me plenty of things to talk about, even on this video. Sorry about that, Kathy. Even on this video right now, it's like, oh yeah, Range Rover. And how did I know how bad they were? Well, a friend of mine is a lemon law attorney. And I asked him, like, which are the bad brands? Like, when do I not see you? He said, well, Bennett, what do you drive? I drive a 20, at the time I was driving a 2010 Honda Accord. He's all, Bennett, you're never going to see me. But if you have a Land Rover, if you have a Range Rover, you're probably going to need a lot more action. So corporate governance and ethics. Now, this is something that's really important. So when you are a publicly traded company, and you reach over a certain market capitalization, and if you are if you are with either the NASDAQ or with New York Stock Exchange, there are certain governance and ethics requirements that are absolutely required. So if you're investing something that's on the over-the-counter bulletin board, you may want to kind of wonder why that's going on. Also over here, in terms of product and equity investments or strategic alliances, as we saw, Amazon was making early investments into Rivian for some delivery trucks. And you kind of see that how is this company basically pushing themselves forward? So again, it's, how does this company planning on what is it doing in terms of research and development? How is it going down that pathway? So those are some examples of qualitative analysis, and I'll be back on in this video series. We'll go through some different ratios. We'll start going through some of the liquidity ratios, but I want to thank you for watching. Please don't forget to like and subscribe. I'm not sure if it really helps me out or anything, but I always hear that at the end of YouTube videos. But if you do have questions, feel free to email me at 1812cpa@gmail.com. Have a great rest of your day, and I'll see you on the next video. Have a great one.